25 Bitcoin could still be in play. There is red all over the charts. We are going to dive into some Bitcoin ESG related issues as well as the amazing regulation. Jumping over to CoinGecko straight away, we can see the market cap is at 1.2 trillion. It's down nearly 1% last 24 hours. And there is red through absolutely everything. Jumping over to Bitcoin here, we can see it's holding above 27,000. The market cap's above 500 million still. Look at this chart. It tried to get back up to 28,000, couldn't do it. It's holding above 27,000. We may still have a little bit further to go in this correction. We'll jump into that. Ethereum, 1848, down 1.3% past 24 hours. Market cap holding over 222 million. Same deal here. Couldn't get above 1900. Looks like it may continue to drop further. Before we get too far, this video is not financial advice. Let's keep going. Having a look at the heat map here, there is absolute red on everything, very little green. Here's a different representation here. The only one that's really up for the day is Radix, and this is something that we're going to continue to watch. Another favorite of mine is Arbitrum. Jumping into the news, and this is the article where they go into Bitcoin traders call for a calm as Bitcoin price slips 10% in a week. Bitcoin is seeing a logical and healthy pullback, says commentators, with 25,000 now key Bitcoin price line in the sand. If we scroll down, if your macro thesis on Bitcoin has changed because of a $2,000 pullback after a $10,000 plus vertical rally from 19k to 30k, you're doing it wrong. So the large major retest we had was at 19k before our rally to 30k. A retest to 25k here would be logical and healthy. After these huge green candles, we usually find some cool down, and then they do finish it off with this. The market composition remains apt to liquidate traders. So if you're on leverage, be careful, with CoinGlass data showing April 22nd costing crypto longs another 173 million. April 19 saw the largest amount of long liquidations of 23 so far. In regards to 25k still being in play, me personally, probably 26.4. We did see a lot of buy pressure come in the last 24 hours, bringing that price back up. It has tapered off a little bit as well. So the market is looking to get cheap Bitcoin, but they also have that FOMO still. So it may not go as low as we think, but it may not shoot back up as quick as we think either. And it may just go sideways or step up slowly, maybe over the next 3 months. It's going to be a long, slow journey, but slow and steady usually wins the race with these things. So jumping over to Ether, erases all gains from the Shanghai rally as Bitcoin and other crypto prices also fall. The second largest cryptocurrency has dropped to its lowest point since April 9. So only April 24 here. I know in crypto it seems like a long time. So after the hard fork enabled withdrawals of some 35 billion worth of tokens locked in staking contracts, crypto markets have been showing weakness in the past few days, as concerns around sticky inflation, stock market earnings, and looming recessions have driven prices lower. That's by Edwin. He said that on Thursday. Another one on Ethereum, the Shanghai upgrade spurs institutional investment into staking. So the narrative here is the fork opened up a lot of ETH to be able to be unstaked, to be able to be sold, and that's going to slowly be unwound into the market. But they are starting to see a lot of inflows here, and if we get into it, the largest staking platforms for institutional investors recorded 3 times more deposits than last month. Allowing withdrawals also reduce the liquidity risk associated with locking up ETH for staking. We expect this to naturally increase staking rates after the initial drawdown of ETH from long-term validators. Not all staking providers have enabled withdrawals immediately. So as these come out, we will see more and more sell pressure depending on what the market's doing. If it's going up, it'll absorb it. We'll see very little price impact. If people are impatient to sell and the market keeps dropping, it could bring us back down. The quicker it goes down, it could bring all of it down. That's when we would see that 25, or we could see that 25k. But we are going to find a floor, I dare say, in the next couple of weeks, and then we'll start heading back up. And one more thing, we are about 51 weeks away from the Bitcoin halving as well, which is pretty exciting. So we're in the right time frame in this cycle. Regulation now. Gemini founders open a crypto derivatives platform outside the US. The first product will be perpetual Bitcoin. Gemini revealed Friday that it plans to open an offshore derivatives platform, announced as the regulatory environment gets tougher. So it'll be denominated in Gemini dollars, which is GUSD. The company said, followed by a perpetual Ether contract also linked to GUSD. Perpetuals do not have an expiration date. So the decision coincides with US regulators getting stricter about the cryptocurrencies in the world's biggest economy. Rival crypto exchange, which is also facing regulatory action in the US, would consider moving away from the country if the rules the industry must abide by do not become clearer. So we'll get into the Mica laws over in Europe, which have done really well to be able to provide a framework. And at some stage, I see the US, when they realize the mistake they're making, pivoting very quickly. So all is not lost yet. It may just take a long time. And that's not financial advice either. That's just my opinion. Going over to ESG, projects mitigate. There's a lot of projects going on to mitigate Bitcoin's mine energy footprint. A couple of cool things happening in the space. So the impact of Bitcoin mining was trending again in the news. That FUD piece by the New York Times article that condemned the industry that had no verifiable data. Bitcoin mining consumes about 145 terawatt hours of electricity per year. So that's about the power consumed by Sweden. To critics, Bitcoin's proof-of-work algo is wasteful by design as its electricity demand continuously grows. To industry advocates, it's a feature, not a bug, as it secures the network while ensuring decentralization. There's the third camp that sees Bitcoin energy consumption as an opportunity. New products and companies are trying to mitigate the environmental impact with several innovative solutions. So they're taking advantage of market instruments that incentivize making Bitcoin more green. The offering essentially is tradable environmental assets in the forms of carbon emissions offsets and renewable energy credits. This is important actually. Carbon credits, assets that represent sequestered greenhouse gases through projects such as reforestation. RECs represent ownership of the sustainability of electricity produced. These certificates represent 1 megawatt hour of power produced from renewable sources such as wind, hydro, and solar. So massive asset managers are now looking at Bitcoin, but they have these sustainability mandates that they must follow. Clean Incentives, that's another company, looks to collect, validate and tokenize ESG, environmental, social and governance attributes. Immersion firm Liquid Stack offers a hardware-based cooling solution that can cut energy used by the computers in Bitcoin mines by 40% and reduce their land use by 1/3. And on the software side, Lincoln, they've created a program that miners can use to more efficiently and profitably manage their operations, including their participation demand response programs and heat reuse activities. Demand response is when a miner or other energy consumer shuts down their operations at times of peak demands, such that the grid can meet the consumption needs. We'll actually skip past that one. China and Singapore team up to scale green and transitional financing. They'll collaborate on concrete initiatives that will catalyze capital flows to support a credible and inclusive transition to a low carbon future for our countries in the region. Collaborate on, so that's that. Solana, annual carbon footprint equals 8 flights from London to New York. And we'll link all this up in 2 secs. So the Solana Foundation released an emissions dashboard Friday to track the carbon footprint created by the thousands of computer services that power the Solana blockchain. Solana servers emitted 10.651 metric tons of carbon dioxide in the 12 months prior to April 1st, 23. That's roughly equivalent to 8 flights from London to New York. Pressure has grown for the crypto industry to take more accountability on blockchain-related emissions contributions to the climate crisis. It is a big agenda. Klaus Schwab, The Great Reset, crazy scary book, but ESG is going to be a global mandate. Some projects out there, Kyoto, Layer 1 blockchain coming out soon. They're looking at carbon credits on the blockchain as well. ESG, regardless of whether you want it there or not, these taxes are going to be pushed more and more and more. And the conversation is going to grow louder and louder. So there is money to be made by finding groups of companies, projects that are trying to look to make things cleaner or greener. Just because that's the agenda of the elite. While we may not like it, we can't change it. So we may as well go with the flow with that one. We'll keep you updated. We'll go back to this article here. So Bitcoin Lightning Network, 1,000x cheaper than Visa and Mastercard. Very interesting. Not the full truth here, because they're talking about quite a large transaction. The median fee rate or the cost to send value across the Lightning Network is 0.0029%, which is 1,000 times cheaper than that of Mastercard of Visa payment processors. So the median fee rate or the fee charge per one Bitcoin sent across the Lightning is currently 3,000 sats. That is equivalent to 84 cents to send 28,800 worth of value, which is a fee of 0.0029. Pretty remarkable. What they're saying here is the legacy payment networks such as Visa and Mastercard charge merchants a fee of around 2 to 3%. And in Cape Verde, the business owner, to accept Bitcoin, he'd rather accept Bitcoin. Accepting foreign Visa and Mastercard costs over 8% there. So there is innovation continually, whether it's ESG, Lightning Network, Ethereum Layer 2 scaling solutions. This industry is moving ahead so fast, so quick. So hit subscribe. We'll keep you updated every day with fast facts during the week, so you can catch up and get on with your day. Obviously, Mica last week, we covered this a few times. What I like is there's two things. The next story is amazing. So with Mica past the finish line, UK's crypto industry calls for rules of its own. The finalisation of the landmark EU law puts significant pressure on the UK to deliver its crypto rules, making it one of the first major jurisdictions to clarify its approach on supervising the sector. While not flawless, Mica is an extremely relevant regulatory stack that puts significant pressure on the UK and US in terms of delivering operational clarity for crypto. So that's in regards to the UK, but look at the Ukraine. They plan to adopt EU's new cryptocurrency regulations immediately after passing the European Parliament. Ukrainian authorities announced plans to adopt the EU Mica's regulation on crypto assets. Incredible, so fast. So, Ukrainian regulators have stated publicly that they will adopt the legislative package in their own country as well. We, along with colleagues from the NKCPFR, the National Commission on Securities in the Stock Market, and other regulators, are already working on implementing some provisions in Mica to make crypto assets legal in the Ukraine straight away. So, regulation, it's not going away, but at least it's out there and people know what to do, and then they can work around it. Over in Texas, proof of reserves bill passes the House of Representatives. Digital asset providers would be restricted from commingling customer funds with any other type of operational capital. So the Texas House of Representatives approved a bill that would require crypto exchanges to maintain reserves in an amount sufficient to fulfill all obligations to customers on April 24, 20. Shout out. It was not a doggy day on 420, that's for sure. Doge did not pump. So this would be restricted from commingling the customer funds with any other type of operational capital and using customer funds for any other transactions besides the original transaction demanded by the customer. All the stuff I love to see. It looks like it's starting to head in the right direction. Obviously, there's that clown show with SEC. At the moment, they're all just puppet masters. It'll be what it'll be. At the end of the day, have your own plan. Not your keys, not your coins. Get your crypto off the exchanges. Hold in a cold wallet, hardware wallet. Anyway, have a very beautiful day. We'll see you on the next one. Be blessed. Peace.